An introduction to auditing. The primary objective of an audit is to find out whether the financial statements are representative of the actual financial position and if it is indeed the working result of an enterprise. Auditing process should also make sure whether it is appropriate to express an opinion on the financial statements, and if yes, whether there exists minimum standards on the part of the management enabling an auditor to do his or her job. Though the responsibility for detection and prevention of errors and fraud lies with the management, the auditor has to use reasonable care and skill in detecting errors and fraud and has to be in a position to advise the client on how to prevent frauds and occurrence of errors in future. Hence, it is understood that the auditor expresses an opinion on financial information according to Standard Auditing Practices 4.4. In doing so, the auditor carries out procedures designed to obtain evidence that will provide assurance that is reasonable that the financial information is stated properly in all its material aspects. Therefore, if fraud or error which is material to the financial information has occurred to the maximum effect, the effect of fraud is to be properly reflected in the financial information and the error stays corrected, and to that effect, the auditor should seek reasonable assurance from the management or the concerned bodies. Next, we will take a look at features of auditing. Auditing is done by an independent person who may be considered an outsider person in all respects. An auditor receives a remuneration known as fees. He or she should have knowledge of accountancy while performing the duties as an auditor. Auditing in that respect is concerned with examination and critical analysis of records and transactions of a business concern. An auditor is required to certify the business's state of affairs as it is disclosed by its balance sheet to be true and fair. It is also concerned with the way a balance sheet of a business, whether prepared, and if prepared, whether it is properly prepared, and its contents, whether true and fair to all concerned. Auditing can be conducted only in the initiative of its owners. It is conducted once in every year. In case of companies, there is a statutory binding to perform and conduct the auditing of a company, and it is conducted independently by the auditor.